What's up, people? Welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So it seems this rally has come to an end, for now. It's easy to wonder if this is the start of another downtrend or just a pause before we head higher. Whether you're bullish or bearish, frankly, a case can be made for why either outlook could play out, and that's precisely the issue at the moment. It could literally go either way. We'll get to Virgin Galactic in just a moment, but for now, let's quick summarize why we sold off. The Fed FOMC meeting minutes were released on Wednesday, August 17th, and I'll sum it up as inflation is still high, the Fed is dedicated to getting it under control. This means more rate hikes ahead to reach the terminal rate of 3.5% in 2022. We're currently in the range of 2.25% to 2.5%. Basically, we sold off because this rally was too fast and too furious. From the June 13th low, we went right up to the 200-day moving average on the SP 500. Crossing over would have been a clear sign that we were back in a bull market, and that is simply not going to happen off of just one lower inflation reading. We need a clear trend, and that requires at least 3 months of improving metrics. The August CPI number is due on September 13th, so between now and then, it'll be a trader's paradise as we chop around and consolidate. Those who participated in the rally are now selling some to lock in their profit, and those who didn't are now getting FOMO and will likely buy in on this dip. So what does that mean for Virgin Galactic, and why did I buy more shares this week? That's what I want to talk about in today's video. As always, this isn't to be taken as financial advice. I'm not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video a like if you haven't already, and hit that subscribe button. Those are 2 easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. Okay, so Virgin Galactic is down 11.24% for the week, which shouldn't be a surprise given the full market pullback we experienced. What you may not know that has added a bit of fuel to the fire is the latest Bank of America released note to investors, further cutting their price target on Virgin Galactic from $7 down to $5. They still maintain an underweight rating. It's basically the same as a sell rating. The rationale for the price downgrade, in their view, Virgin Galactic has established a track record of pushing back launches. And despite the various investment the company has made to prepare for volume flights, you can catch my last video here that details what they are. In Bank of America's view, and I quote, "We remain uncertain that there will be enough demand to justify these production levels," end of quote. I'd love to say that their skepticism isn't justified, but the reality is that it is. If you look at the analyst consensus on Virgin Galactic, it is decisively bearish. The majority of analysts covering the stock recommend a sell with only 1 buy and 1 hold rating. The average price target is $6.25, with a high forecast of $12 and a low forecast of $4. This then essentially means that collectively, more downside is to be expected. But if you've been following the channel and the stock, this was to be expected. So why did I buy? Well, there are 2 signals that caught my attention this week as I was deciding if I should start adding more to my Virgin Galactic position. The first signal is easy, I've talked about it before. It's the 50-day moving average. It's a pretty binary approach, but if the price is above the 50-day, in my book, it's expensive relative to the performance we've seen to date. And the fact is, it's currently too soon for the stock to really take off, which is why we've been tracking the 50-day line. However, if it's below the 50-day, it's good value, and I'm more likely to see a bit of upside on those shares as the entire market rises, even if it's a short-term pump. Whether I sell on those pumps is irrelevant, frankly. It's more about getting the best value, accumulate as much as I can, and reduce my average cost along the way. The 50-day price as of Friday is $6.83. You can see that we have once again fallen under it. Taking a closer look, you can see how it continues to act as resistance with the occasional pop above. The second signal is the short interest in Virgin Galactic. Short interest is the number of shares that have been sold short, but have not yet been covered or closed out. Short selling is when a trader borrows and sells shares of a company they do not own. The hope is that the price will fall. Traders make money from short selling if the price of the stock falls, and they lose money if it rises. Short selling is therefore a way to still make money when the stock is trending lower. I personally do not short Virgin. Now, with that said, the reason you want to pay attention to short interest is because it can act as an indicator of market sentiment towards a particular stock. An increase in short interest can signal that investors have become more bearish, while the opposite can signal they have become more bullish. So looking at Virgin Galactic specifically, this chart here shows you the short interest over the past 3 months, and overall we can see that it is trending down. This doesn't mean that we're going to moon tomorrow or next week. It most likely, however, means that downside here is limited, and therefore as a trade, betting against the stock isn't as profitable. The reason this is relevant, $5.14 is the current bottom for Virgin Galactic, and similar to NEO, I believe that May 12 is when the bottom was put in for Virgin Galactic. Being below the 50-day moving average and seeing the short interest trend decrease is an indication to me that these are good levels to resume accumulation at the best value. That is the reason I added another 300 shares this week. I'll continue to add within my means so long as we are at these levels or lower. I've said it before, but it's worth repeating again. Virgin Galactic is a long-term play. I would say that we are 3 to 6 months away from any meaningful and sustained move above the 50-day moving average, and that's assuming that no other delays occur and broader market recovery continues with inflation coming down. The bottom line is this: don't chase the pumps when they occur near term. Those are a great time to sell if you're looking to take a quick profit on your Virgin stock. These pullbacks are a time to add, assuming of course that you do believe in the long-term prospect of this company. But on that note, keeping it short and sweet for today, a quick look ahead. NEO is set to report earnings next week, which I'll cover, so keep a lookout for that. Don't forget to drop this video a like if it helped you gain a new perspective, and share with others who you think could also benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.